Welcome to my morning report analysis videos of me, Richard Perry, market analyst at Huntech Markets on Wednesday, 7th of June. It's one day before several key risk factors going to hit the markets. Tomorrow you've got the ECB monetary policy meeting. You've got a testimony by former FBI Director James Comey, which could again significantly ramp up the political pressure on Donald Trump, and also the UK goes to the polls tomorrow. These risk events are generally sort of seeing a bit of consolidation in the markets ahead of that. Let me show you the current position of the markets and where they are today. Little real movement on the euro and sterling. Japanese yen slightly stronger against the dollar. Gold basically flat on the day. These equity markets are all sort of fairly mixed, nothing really in terms of direction, and I think these it's fairly sort of cautiously consolidating with these risk factors on the horizon. Now the Aussie dollar is strong today. We had the Australian growth numbers coming out much better than expected this morning, and the GDP beat on the quarterly and also the year-on-year data. So that has helped to drive a bit of Aussie outperformance today. But much beyond that, we've not got a great deal that's impacting the markets until we've got the weekly Eia Inventories, the oil inventories this afternoon. Minus 3.5 million on the crude oil. Now that would be the 9th consecutive week of inventory drawdown, which would be interesting, but also looking at the distillates and gasoline stocks are expected to rise slightly in terms of 0.5 on distillates and gasoline by 1 million barrels there. So not a huge amount of movement on these markets today, and we're sort of pretty much just setting us up for this big volatility that we're likely to see tomorrow across forex markets and equities, I think, on Friday, especially in light of the UK election, especially on the equities there. So my chart today is silver. Now what we have seen is silver forming this uptrend channel recently as the recovery has continued to move forward. We sort of retraced through 50% fib of that big sell-off from April into May, and it continues with through 61.8% fib now, closing above that fib level. That arguably does open 76.4 at 1802. Now 1802 is also that reaction high there of 18 big figure that we saw late April. So that is a resistance level that the market will be probably looking out towards. But looking at these momentum indicators, the RSI is into the mid 60s, MACD lines above positive and rising, and the stochastic strong. So this recovery in this uptrend channel remains on course. That the bottom of that uptrend channel comes in around about sort of 1725 to 1730 area. But I'm not really expecting that to go too close to that uptrend channel for now, because I think the market continues to rise pretty strongly. Having broken out above the resistance, you can see that the market continues to use old levels of resistance as new basis of support. The old breakout from that mid-May high around 17 bucks basis of support. We saw this latest breakout above 1745, again becoming the basis of support. And if I zoom in, you can see it sort of happening again with this latest sort of resistance and becoming supportive. So you can see these old levels of resistance are becoming supportive and the basis of the next leg higher. Resistance 1775 from yesterday's high, that now sort of lies in the way of a move towards 18 bucks, but certainly this uptrend channel remains intact. Little corrections are a chance to buy, and I think there is further strong momentum on the hourly and the daily, and this little unwinding move back towards sort of 40 to 50 I think gives the RSI a chance to renew upside potential, and gives the buyers another opportunity. So I wish you good luck in your trading today, and I will speak to you later. Thank you.